Malcolm, maybe we'll start with you. Is 75 basis points now your base expectation, or do you still think that the Fed sticks with its plan of 50 going forward?
Yeah, Dom, I actually think the Fed is probably going to go 75 here just because wherever this story mysteriously came from Monday afternoon, I have to imagine that it's probably based on some insider information. And that's probably the Fed doing what it can to not come out and completely surprise everybody at the meeting Wednesday and get a little bit ahead of what they know ultimately is the announcement. And so I have to imagine that 75 is probably it. However, I've been one of the folks on the network the last few months saying 100 is actually the number. We need to go hard and fast to make sure that we signal to the markets just how serious we are. I'll take 75, but to me, 75 is basically the equivalent of, putting your kid in timeout, but telling them, hey, we're going to go get ice cream after, right? Like you kind of got them to act right, but it's not necessarily all that's needed to get us where we need to be.
I mean, timeout and ice cream. That doesn't sound very forceful at all, Ben. This is a situation, of course, where we know that consumer prices are, yes, at multi-decade highs and a real problem for everybody in America right now. But if they go 75 or even 100, hypothetically, as Malcolm points out, Ben, doesn't that seem like a panicky type move for the Federal Reserve?
Yeah, it is I think, a game of expectations. On Friday, we had the worst combination of inflation, and the CPI was worse, and the expectations for the long term out of the Michigan survey were worse too. I think that triggered a lot of these calls for 75 basis points. The Fed has always been about, we have to anchor long-term inflations and inflation expectations. If that changes, I think that's part of what the story from the Wall Street Journal is also alluding to. Perhaps within the Fed, there's now concern. They have to really get ahead of that. And I think that is, the reason why a large rate hike is about, we're trying to manage expectations from here, especially what people feel about inflation going forward. So I think the baseline here is that you go into this meeting with 75. After that, you can again reassess if inflation does start to moderate. And that's, I think, still the trajectory but that they have to get ahead of the curve is clear based on Friday's data.
Ben, could I follow up on that? I've had in this chair, I get the chance to talk to a lot of very smart people like you and Malcolm. But Ben, I've had more and more conversations with very smart folks in various parts of the financial and real estate industry who always talk about this idea that, yes, you can still kind of get things going with the economy, yet not send it into recession. But at this point, more and more folks are saying, hey, maybe it would take a recession to calm down inflation. Do you feel, Ben, as though we need to send this economy into recession in order to cure inflation?
So recession is never a good solution because, as we know, it leads to unemployment and therefore leads to more recession, more worse economy. So I think we want to be careful with talking ourselves into a recession or wishing that it is the right solution, therefore getting inflation down. I think it comes more down to, Dom, that if you manage an interest rate such that you're getting this tightening of financial conditions, as we say it, the stock market down and bond yields up to a point where inflation does start to moderate, then you have done your job. I think you can then skirt the recession. I don't think you want to make it a call to have the economy go just by deliberately in a recession and therefore cure the inflation problem. It's just going to take some time here with several series of rate hikes well into next year to get this inflation more long-term under control. I think that's what the Fed will be after, instead of a hard landing recession scenario.
All right, what's interesting right now is in just the last few moments, what we've been showing you is charts right now. And for those listening on Sirius XM, what we're showing is a tick higher just in the last few moments or so, and not just the S&P 500 futures, but the NASDAQ futures as well. It's nothing to really write home about, but still on a day after we've gotten some of the largest losses we've seen in recent memory, maybe the bulls will take it. Malcolm, if you take a look at the market action right now, a lot of the conversation has been about whether there's been a kind of bottoming process that you could actually dip your toes into. Do you feel as though this is a time where you could start deploying capital and putting money to work?
I don't. I wouldn't actually put money to work here, especially until we get Wednesday's meeting notes and we do know for sure which direction the Fed is going to go. But I say that because I am actually of the opinion we're already in the midst of a recession and we just haven't admitted it to ourselves yet, right? So we are at a place where the market could fall another 10, 15%. I'm talking about the S&P specifically. And I think that it's very important for folks who are looking to deploy new money into the market, at least dollar cost average their way in, because I think the more bad news comes out, and I do think we're likely to get more negative news after Q2 earnings start to release, and we hear just how light companies' profits actually were, we're probably going to have another leg down here. And so I think if you didn't use last week and the week before it as your exit ramp to pull money out of the market for whatever short-term needs you might have, you definitely are at risk of us falling another 10 to 15 percentage points in the short term as we try to adjust to new news, the 75 basis points becoming a real thing. Maybe I'm right and we get 100 and the Fed does actually end up surprising us. I know it's unlikely, but let's just say, for hypothetical sake here. So I don't think now is necessarily the time to be coming in here and trying to buy this dip. This is a little more than a dip.